Hey everyone, I'm Charting Man Dan with the Chart Guys. In this video, we're going to go over a quick little pattern that I'm starting to use a bit more in my trading over the past couple of years to help us identify reversals from strong trending markets similar to Wyckoff. Let's go over what it looks like. So what I'm referring to is when you have a strong trending market in one direction or the other, and then you start to balance out and trade sideways. And the analogy that I've given many times that you may have heard is that of the old-fashioned scales that are balancing between supply and demand. So if you have a strong uptrend and you're going significantly higher, you've got demand outweighing supply. And then you start trading sideways at times, and that's the scales starting to balance out. And then we look for the scales to tilt, where supply then begins to start outweighing demand. And so an example of that, first one here is Netflix on the daily time frame. We can see it just shot straight up, just incredible strength, higher low every single day for an entire month almost. And then when we topped out, it wasn't a climax top, it wasn't euphoria and then a hard drop. It was days of sideways where we're literally just trading within a defined range. And if we zoom in to what that looks like during that point in time, we've got a very clearly defined range. And so this isn't exactly Wyckoff, it's similar. And Wyckoff, if you want to check it out, is this. And I've never really used this in my trading personally, but strong trending market, you then start to trade sideways before we roll over. That said, there's the spikes out of this channel. And so I look at Netflix, the 4-hour time frame, we didn't have spikes out of the channel. So it's not that exact kind of setup, but the logic is similar. And so what I love about this is you got a very clearly defined range, and you can either be an aggressive bear and short and put your stop over the high with a bit of wiggle room, or just wait for the support level to break. And so I personally took this swing trade short on Netflix, knowing daily consolidation is inevitable, and we just built a base of support. We held 476s, 475, 75, 75, 74, and then we rolled over. And it was a pretty decent pullback in a quick period of time from there. So again, just think of the analogy of the scales being unbalanced, they balance out, and then sometimes they flip in the other direction. An example of a longer term bottom being set. This is Coin, the cryptocurrency stock. And a lot of these growth names here in 2023 formed this bottom where, again, it's just complete bear control. There is no question about whether supply is outweighing demand. And then we start to trade sideways. If we go to the monthly time frame, we can see that we bounce and set a lower high, lower low, no follow through, lower high, higher low. We're just tightening up. The scales go from extremely weighted on demand exceeding supply, and then they start to do this, and then they flip. And there's a lot of names that did that on the longer term time frames, a lot of growth names specifically coming out of the bear market of 2022. So it's on all different time frames. It can be on the 5-minute time frame as well. The keys are ideally an extremely extended trend, and then you look for the sideways type of action. And obviously, it doesn't happen every time, so you have to protect if the trend keeps going, but look for extremes. These are both some extreme examples, with Coin dropping, before this base started forming, Coin had dropped 86%. And again, Netflix, before that top started forming, it was a higher low every single day for a significant period of time. There's a couple patterns to keep an eye on that may play out from this current kind of setup. And I'm looking at CMG on the daily time frame. And so again, I just look at the weekly chart. And this weekly chart has gone straight up, stair-step pattern, which is another strategy video to check out. Google stair-step chart, guys. Higher low every single week for 2.5 months. And so my question is now, every week has been a higher low and a higher high. Not this week. Is this starting out the sideways balancing out phase that is going to eventually lead into weekly consolidation? And I don't know what burritos and websites have to do with each other, but GoDaddy, GDDY, is the same setup. Straight up on the weekly time frame, now tightening up sideways. And if we zoom into the daily time frame, we can see it's just higher low, lower high, standard little equilibrium. Is that the scales between supply and demand balancing? And do we see them flip in the next week or two where supply starts to outweigh demand and we get that weekly consolidation? You've got to use your stop again because it is trading counter trend in the sense that the bulls have had complete control for 2.5 months and we're scouting for that pullback. But let's see how GoDaddy and CMG play out in the coming weeks and whether they meet the criteria to be this balancing out kind of trade.